So I just want to take you through a course that's going to be transformative, and it's going to show you how to tactically allocate your portfolio between stocks and bonds throughout the business cycle. And um, what it'll do is it'll measure key areas in the economy like interest rates and determine, whether there's stress under the surface, and give us a sign of caution where we might want to pump the brakes and put on the yellow light and tactically shift from full exposure, which may be 80% equity, 20% debt, during an expansionary period, and slowly start to shift to 70% equity and 30% debt, like we did in February of 2025. And when we have full confirmation that the market's going to sell off, as observed by like a death cross signal of the 21-day moving average below the 200-day moving average, then we want to get to our um, fully defensive position of 60% equity, 40% debt, or even 50-50, and rotate to 60-40 in between. However, once the market's done selling off, we want to be able to measure when to come back out of that and get back into like a 70% equity, 30% debt. And I believe that I have tools and resources in the upcoming videos that you'll want to watch on how to do that, and then how to fully go back to reallocating at 80-20.